Hello and welcome to one and all. In today's class, we will move on to the next answer from theory of distribution, the concept of gross profit. Okay, so you all know that profit is the reward for the entrepreneur. So landlord gets the rent, laborer gets the wages, capitalist gets the interest, and finally the residual income, whatever is left over, is the profit for the producer. Okay, so that is the SAQ number 25. Explain the concept of gross profit. And so profit is the surplus income over cost of production. So it is the residual income left with the entrepreneur as a reward after the distribution of all other factor payments like rent, wages and interest. So out of the total sales revenue, whatever is left over after paying all the other factor payments, that residual income happens to be the profit for the producer. And there are different concepts of profit. It is the gross profit, net profit, normal profit, abnormal profit. So many concepts of profit are there. So let us check out what is the meaning of gross profit. To put it very simply, gross profit is the difference between total revenue and total cost of production, that is TR minus TC. Okay, so there are so many elements that are included in the gross profit. So gross profit includes all the implicit costs of the producer, such as rewards or the rent payable to his own land or buildings which are used in his business, that is implicit rent. See, for example, if the landlord is using his own personal premises, okay, for the factory building, or to erect a shop, or for whatever it is, he is using his own personal space. Okay, had he given this space for rent to someone else, some third party, he would have received the rent, but that rent he is sacrificing because he is using his own personal space or place for the shop or for conducting the business activity. So that is what is called as the implicit rent. So that is included in the gross profit, or in other words, that rent is not shown in the total cost, because had he rented it from third party, he would have paid the rent and that would have been entered in the books of accounts. So the total cost would show that rent, how much rent he is paying. But since it is his own personal place, he is not paying rent to anyone, so that is not shown in the total cost, or to that much extent there is a decrease in the total cost. The same way, the next one, interest payable to his own capital used in his business, that is implicit rent interest. That is, had he given his savings to someone else, he would have received the interest, isn't it? Or in other words, had he borrowed from someone else money, the capital, he would have paid the interest. So that would be equal to cost. So that cost would have shown in the books of accounts. But again the total cost would have increased and the profit would have decreased. Since his own personal savings, he is not paying rent to anyone, or he is not paying the interest to anyone, sorry, not rent, interest. So he is not paying interest to anyone, that is not shown in the books of accounts. So to that much extent, again the total cost is showing a decrease. And the same thing, the third one, wage payable to the entrepreneur for his management, that is implicit wages. So either implicit wages, he is also eligible for certain amount of wages, but he is doing the manager's job. Okay, he is doing the manager's job. Had he hired a manager, he would have paid the wages, and again that would have amounted to increase in the cost. But since he is himself is doing the manager's job, or he is also eligible for his own activity, he is also eligible for certain kind of reward that is not shown in the books of accounts. Again, that is, to that much extent the total cost is not showing that much amount of wages. Okay, and other charges like the depreciation charges, insurance charges, all these are not reflected in the total cost. And finally you deduct all these, what you arrive is the net profit, which is the pure economic profit. So this is the formula. Gross profit is equal to implicit rent plus implicit interest plus implicit wages plus depreciation charges plus insurance premium, and finally whatever the leftover is the net profit. So net profit is the pure economic profit. So after deducting all those implicit charges, still if it is any leftover is there in out of the total sales revenue, that shows the efficiency of the producer. So the true economic profit or the pure profit is the net profit and not the gross profit. Okay, so gross profit is just the total revenue minus total cost of production. So let me explain to you with the help of a numerical example. Anyway, this is the 5 marks answer. Let me explain to you with the help of a numerical example. Okay, so this is the formula. Gross profit is equal to total sales revenue minus total cost of production. So let us assume example, Mr. X is sold 100 pairs of shoes at the rate of rupees 500 per pair by incurring a cost of say rupees 10,000. So this 10,000 is the cost of the materials. Okay, so the total sales revenue is equal to 100 into 500 rupees 50,000. That is the sales revenue Mr. X is receiving, and the total cost, only the materials cost, so this is equal to rupees 10,000. So gross profit for the time, let us say total revenue minus total cost, so gross profit is rupees 40,000. Now let us assume Mr. X used his own building to erect the shop. If he had rented it out, he would have received rupees 8,000 as rent. So that means what? This is the implicit rent. So that implicit rent is rupees 8,000. Second, he used his own savings for investment. Had he given as loan to someone, he would have received rupees 5,000 as interest. So that is implicit interest is rupees 5,000, plus all the other operating expenses like depreciation charges, administrative charges, so many other expenses equaling to amount rupees 10,000, which he himself is doing. So all this 8,000 rent, this 5,000 interest, and the 10,000 operating expenses, they are not entered in the books of accounts. So they are not reflecting in the total cost of production. So if you have, but if you are including all these things, if you are entering all these things in the books of accounts, then the total actual cost would be, see, the cost of materials we have already seen, it is 10,000. Implicit rent rupees 8,000, implicit interest rupees 5,000, operating expenses rupees 10,000. See, in the cost of materials you can include maybe the cost of labor also. Okay, whatever it is, that is 10,000. Implicit rent is 8,000, interest is 5,000, operating expenses is 10,000. Now what is the total cost now? 33,000. So it is not, actual total cost is not 10,000, the actual total cost is rupees 33,000. So now what you have to do, the total sales revenue is 50,000 minus the total cost rupees 33,000. So finally what is the residual income? Rupees 17,000. So 40,000 is the gross profit. If you deduct all those other costs, then the net profit is only 17,000. This is the pure economic profit received by the producer. So now I think you can understand the difference between the gross profit and the net profit. Or there is another way of calculating the net profit. That is, net profit is equal to gross profit minus implicit rent plus implicit interest plus operating expenses. So gross profit is how much we have seen? 40,000 minus 8,000 plus 5,000 plus 10,000. 8,000 is the implicit rent, 5,000 is the implicit interest, and 10,000 is the operating expenses. So 40,000 minus 23,000, then the actual net profit is equal to rupees 17,000. Okay, so this is the difference between gross profit and net profit. So here we have seen net profit is equal to gross profit minus implicit rent plus implicit interest plus operating expenses. Or there is another way, the gross profit you can rewrite it as, or gross profit is equal to implicit rent plus implicit interest plus all these operating expenses plus net profit. So if you have to arrive at the net profit, you deduct all these items from the gross profit, we will arrive at the net profit. Now this is the difference between the gross profit and net profit. So finally we have seen that gross profit, we have checked, it is equal to rupees 40,000, isn't it? But net profit is only equal to rupees 17,000. So gross profit includes so many elements, so that is not showing the true economic profit. Only the net profit will show the pure economic profit or the efficiency of the producer. Okay, now this is again the 5 marks answer. Explain the concept of gross profit. Okay, so I hope you have understood the concept clearly, what is the difference between the gross profit and net profit, and what are all the items which are included in the gross profit, and you have to deduct those items in order to arrive at the net profit. Okay, so if you have any doubts, please mention it in the comment box. So otherwise, if you have find this video useful, please like, share, and also subscribe to my YouTube channel. Okay, so this is the answer. Okay, so until my next class, take care, bye bye.